So Amazon is currently making big moves within the market. Is this natural, however, and what is the reason for this? In this video, we're going to be looking at some of the financials surrounding Amazon and looking at the related news to this recent growth. We're also going to see if Nvidia is in trouble with this new Amazon announcement. So let's get straight into this video. Before we do start, however, I do need to say I'm not a financial advisor. Anything I say is just for entertainment purposes only. You should always do your own research before buying into a stock. So yesterday, Amazon announced their partnership with Anthropic, which is a leading AI company. Amazon and Anthropic to deepen their shared commitment to advancing generative AI. Amazon concludes $4 billion investment into Anthropic. So the work that these two companies are doing together will bring the most advanced generative artificial intelligence technologies to customers worldwide. Ignore my awful highlighting skills, but Anthropic will use AWS chips, I'm not going to attempt to read them out because I'm dyslexic, to build, train and develop its future models, and has made long-term commitments to provide AWS customers around the world with access to future generations of foundation models on Amazon Bedrock. So from this we can gauge that Amazon is now taking an advancement in developing some new chips in which can compete on a similar level to Nvidia. So if you hold Nvidia stock, should you be worried? Absolutely not. I don't think this is a threat anytime soon towards Nvidia, as they are just so far advanced with their current level of chips. Nvidia's Blackwell chips are already in development and are set to be coming out this next month, so there's already a lot of catching up for Amazon to do in this generative AI field. But we are seeing a big drop in Nvidia stock at the moment, with the stock falling 9.17% in the last 5 days. This is due to their earnings report coming out, which was actually very positive, and people spreading their AI bets across the market now, with new players such as Amazon entering the field. But I would definitely not be worried if you do hold Nvidia stock, as that company is ridiculous still, and it will continue to rise and rise, as they can only meet 1 in 15 of their customers' demands, so there is still much room for expansion for this company, as they make hundreds of millions of dollars per day. So it is a perfectly fine stock. I would not be worried. So looking at Amazon on a 5-day chart, they are up 1.32%, and on the year-to-date chart they are up 35.29%, showing very positive growth, with a positive PE ratio of 43.92 and another strong EPS of 4.68. So there is clearly still room for Amazon to grow into within the market. So we're now going to have a look at the previous 5 quarterly earning reports for Amazon and put this into my system to help us see where these financials are leading the company. So with that being said, let's input this data into the system. So inputting this data off of Yahoo Finance, we can deduct a liquidity ratio, a retention rate, and we can compare the free cash flow of the past 5 quarters. So looking at the liquidity ratio, we can see a relatively strong liquidity here. Amazon is notorious for always being in debt. This is just their financial model, and it does seem to work out really well for them. So it is an important note to take this with a pinch of salt. So looking at the past 5 quarters, they are all below a ratio of 1, which in an ideal world is not great, as you want $1 of liquid cash to pay back your total debt. And Amazon does not have this privilege. However, they have made this work since 2000 and whatever, when they were founded, so they are perfectly fine. 1996 is when they came public, so not 2000. But moving on to the retention rate. So this allows us to see how much money comes in and out of the company on a retention rate. So looking at this, it is roughly around 10%-ish. It is improving as of late and is kind of where you want it to be. This could be better, however, but it is important to see that they are in strong profit, so there's not much to worry about here. Looking at the trend lines, this is also expected to increase. And now looking at a free cash flow statement for Amazon, we can see it's all right. This money will be used for paying out debt, buying back stocks, or paying out dividends. And here we can see the difference between the operating and free cash flow. We do want to see this decreasing, however it does seem to be increasing at the moment. And the bottom trend lines are expecting this to continue for some time. But it is important to say that you can't take too much off of the trend lines. That is just a trend line. So that concludes the quarterly earnings. Not the greatest financials, however, they do definitely make it work with a $2 trillion market cap. So you have to take it with a pinch of salt. So moving on to the price to volume exponential charts, we can see where this stock is projected to go in the next the next 2 months it's set to. Here we can see that volume is projected to decrease and price is of course projected to increase, with a projection of the price reaching $200 within 2 months and volume to decrease gradually. And now moving on to a 91 volume to price chart, we can see a relatively similar story. This is looking at the next 30 days. We're expecting to see a volume increase, mid to short term, and again a positive increase for the price. Once again showing that we should hit $200 between a month and 2 months time. So here we can see how a trend line affects the actual stock. So if we do have a very bullish stock price and the trend line isn't matching up, there is potential for a huge sell-off as it tries to meet this trend line again. On the other hand, which is more accurate for Amazon, if your trend line is relatively on par with the price and volume, then it is often more of a stable stock. It also shows volatility being much lower than it would be with a weaker trend line. So it is very, very good for Amazon to be matching this trend line for sure. It is also important to say this is not always the case. This is just statistically what often happens. Let me know if that makes sense in the comments, as I've just drawn this up now to prove this example, but it should make sense. It makes sense to me, and I'm not a financial guy, so let me know what you think in the comments. So here we can see a 52-week high of $215 and a 52-week low of $142. We can see the average volume to volume is showing that currently we are below the average, which essentially means that volatility is currently low. This could mean that the price shouldn't spike or drop too drastically, which you can picture there on the bottom chart. The beta rate is also relatively high. This will be comparing it to the Nasdaq, so this just shows the volatility when compared to the Nasdaq. This isn't necessarily a good thing, but it isn't a bad thing at all. It just means that on a volatility rate, it outperforms the Nasdaq. That could be either up or down. So that concludes my system. Now let's jump on to see what the analysts say. Before we move on, let me know what you think I should add to this system, or if you even like it at all. It will be greatly appreciated to know your thoughts. Also, whilst I'm at it, please do hit the like and subscribe. Now looking at the ultra short term for Amazon, this will be within a week. If you were looking to have a really short trade, we can see a Sharp and Sortino rate of 0.04. That essentially means that the risk to reward isn't that high, and the same with the Omega rate, which is at 1.27. So essentially what that means is it's not great for ultra short term at the moment. With the analysts projecting a 250 at the top within the next 90-day price and a low of coming up to 150. Personally, I do see it going a bit like that. Maybe that's a bit of a exaggeration. I think it will get to about 230, with 66 analysts projecting this as a strong buy and a positive bullish stock for the next year. Now this is quite interesting, looking on Google Trends at the interest over time for the search term Amazon. This is a bit weird. So within the last 5 years, we have seen a drastic spike this year. I don't know what is going on with this. This doesn't seem to be accurate at all, but it's an important metric to understand when comparing Amazon to the price, as it is an online store. It should correlate quite strongly, but I think this is broken. With the interest regions being Jamaica, Germany, Italy, Austria and Japan. So that concludes my analysis of Amazon. I do genuinely think it's a strong buy. However, I am not a financial advisor. I am just a finance noob. Long term, it's definitely a good buy, and I do always believe it will be. I wouldn't be worrying about Nvidia if you are holding Nvidia stock, as they are just complete light years behind in development. It's more of a threat to companies such as AMD, but again, not really. I would rate this a long term of definitely an A and a short term of a D. I don't see there being much short term growth apart. I mean, today there's been a huge sell off due to people taking profit after the Anthropic news, but I do think this is a very strong stock going forward in the long term for sure. So with that being said, please do like, subscribe, and I'll see you for the next video.